We just completed a September month in the green for the S&P 500, which is historically the worst month of the year by far for the stock market. What does that mean for stocks moving forward? Take a look at this. As we can see, well, October could go either way, but 13 of the past 14 times the S&P 500 has made a new high during the month of September, something we just did again here in 2025. The fourth quarter of the year saw positive returns. Only 2018 and 1967 are the outliers for the past 22 times this has happened. But 2018 was a steep sell-off. In fact, since 1950, the fourth quarter has historically been the strongest quarter of the year for stocks, and it's not really all that close, as you can see from this chart I found from Carson Research. So what do we expect in the fourth quarter of 2025? Well, I expect much of the same, but at the same time, there's a few hurdles that we have to get through. We have a government shutdown that's right in front of us where both sides are playing politics, and at the same time, we have a massive jobs report that's coming up here on Friday of this week. Again, now, a pullback wouldn't frighten me by any means. In fact, I would welcome it because it would give us an opportunity to buy stocks at a lower price. And I always want my subscribers to be ready with a game plan when we get those opportunities. Not something we've got all that much in 2025. But in today's video, we're going to talk about 3 stocks that I believe are going to explode moving into 2026. All 3 of these stocks you could look at as buy potential stocks right now, but I'm going to take it a step further and I'm going to give you some option plays as it relates to all 3 of these stocks. So like we do with every video, show your appreciation for the content that we put out just by simply clicking that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could check out their 10 best stocks to buy right now. All right, let's jump back into our video, taking a look at 3 stocks that I believe could explode heading into 2026 and beyond. And the first one is going to be PayPal Holdings, stock ticker PYPL. And again, PayPal is a name that's been in a few of my videos of late, and the stock is incredibly cheap. The stock is a fintech play. The stock is a play on the growth in e-commerce. Taking a look here at PayPal, we can see they currently have a market cap of $64 billion. Over the past 12 months, shares are down 10%, and year to date, down 18%. One of the plays on PayPal is the revenue growth it's seeing from its popular Venmo app, finally finding ways to monetize it. The other is a growth in e-commerce, and right now, e-commerce sales as a percentage of total retail sales is right around 16.5% as of the latest Q2 data. In Europe, that number is up over 20%, so it just shows you how we can grow into that, and it's going to benefit the likes of a PayPal. The company, in addition, continues to grow both its top-line revenue, but it's also finding ways to be more efficient, as operating margins are sitting at record highs of 18.2%, as you can see from this fiscal AI chart. From a valuation perspective, the stock is quite cheap, as it trades at a forward PE multiple of 12.9 times, well below its 5-year average of 26.9 times. Earnings growth of 12% gives the stock a PEG ratio right around 1, which is very intriguing. In addition, the EV to EBITDA is just at 8.7 times. I mean, this company is really getting zero credit for the EBITDA they continue to generate. The 5-year average is as high as 27.7 times. So if you're interested in buying the stock, it's a great valuation. I would say go at it if you are looking for fintech exposure. But at the same time, I want to approach it given the headwinds that we know are out there from a valuation perspective for the S&P 500, a possible government shutdown, and the jobs report. How about we approach this from an option standpoint, a way that would allow us to potentially buy a stock that we want to buy at a much lower price. Looking here at the charts, we could see the stock has been consolidating between the $70 and mid-$60 range, and it's ready to break higher. Let's take a look from an options perspective now at the November 21st $65 put, which would give us the potential obligation to buy the stock at a lower price. Again, already a stock we would like to buy if the stock price fell. And for that, we would be earning $230 per contract for selling that option. That money is ours to keep. And if you're interested in learning all about stock options, I am holding a 3-day options workshop starting today. It'll go for the next 3 days, starting at 8 p.m. Eastern Time. But at the same time, if you're unable to join us live or you see this video after we've already started it, no worries, because you will get the recording for each and every day. During this 3-day workshop, we'll be going through a number of different strategies and examples of how I utilize the same playbook to generate roughly $10,000 per month from stock options. This isn't some magic trick. This isn't something that needs $1 million portfolio. This is showing you the playbook, the exact playbook that I utilize to generate income on a regular basis. And this is something that's going to take your investing to the next level. So make sure you check out that link down in the description below and join our 3-day option workshop today. And that leads us to stock number 2, which is going to be Advanced Micro Devices, stock ticker AMD. And when it comes to AMD, although they're always set in stone very closely with NVIDIA, AMD is a stock that I own in my portfolio. We've talked a lot about it within my Discord community, and we've made huge profits by selling a lot of options with the likes of AMD. And again, these are two companies, AMD and NVIDIA, that are drastically different, but the same in many ways. But NVIDIA, we have to recall, is a $4 trillion company. AMD is a $160 billion company. We don't need AMD to surpass NVIDIA. Just closing the gap slightly would give us huge gains in AMD shares. The stock currently has a market cap of $161 billion. Over the past 12 months, shares are down 1%. And year to date, up 34%. So hearing that and looking at it, we could see the year to date number, over 30% gains, have been pretty solid. But they don't tell you the whole journey that us AMD shareholders have been on. Taking a look here, you could see on this FinChat AI chart I grabbed, this shows the April 8th low of this year to where the stock is today. And yes, that is over a 100% gain from that date until the end of September, which is just phenomenal. When it comes to AMD, the revenue growth is really picking up, and the orange bar chart you see on here is their free cash flow, which is sitting at a record level over the past 12 months. And from a valuation perspective, the stock looks rather intriguing as they trade at a forward PE multiple of 31.8 times, again, below their 5-year average of 35.5 times. Earnings are expected to grow 54% next year and 24% the following year, making for a 2-year average of 39%, giving the stock a very enticing PEG ratio of 0.82. So again, this could be a great stock to buy right here. But if you like to layer into positions and utilize options while you're getting paid to buy stocks that you already want to buy, but at cheaper prices, we like to utilize options. But before we do there, let's take a look at the charts. And what we can see is the stock is setting up in a bull flag pattern. And we would love that lower end of that flag, around that 145 to 140 range, as it would make the stock even cheaper than where it's at today. As such, looking at the options here, let's take a look at the November 21st 140 put option, which would give us the potential obligation to buy the stock at a lower price if it were to fall. And at that 140 strike price, that would earn us $415 in income. But if you want to be a little bit more aggressive and you wouldn't mind purchasing the stock at 145 if it were to drop that low, you could earn $550 in income just from one contract. If you were to sell 2 contracts, that would have you in over $1,000 in income from this one single option trade. And that's going to lead us to the third stock on our list today, which is going to be JD.com, stock ticker JD. And again, I have my own personal rule to not own outright stocks over in China, because you never know when the government is going to step in and get involved. However, that doesn't mean I can't take profits and profit from an option standpoint with Chinese stocks. And if you've been part of our Options Edge community on Discord, you know that we've had some highly profitable trades for both Alibaba, stock ticker BABA, as well as JD.com. And again, if you're still new to options and this kind of intrigues you and you want to see more examples and learn more about some of these strategies that I utilize, then check out our 3-day options workshop. Again, that link is down in the description below. You will get the recording to all 3 days, even if you're unable to join or you see this video after the course has already begun. Taking a look here at JD.com, we could see the company has a market cap of $47 billion, making it the smallest company on our list here today. Over the past 12 months, shares of JD are down 11%, and year to date, they've squeaked out a small gain of just 3%. So looking at those right there can show you just how powerful options can be and how and why they can take your investing to the next level. Shareholders of JD.com are down 11% over the past 12 months, as we just saw, up only 3% in 2025. But when you look at our trades at Options Edge Plus, my subscription on Discord, we have some highly profitable trades. And if you want to look at all of our trades at Options Edge Plus, we have an 85% success rate. We are showing you all of our trades. We have nothing to hide right there. We have a recap each and every week so that you can track us and we can be transparent with you. So getting back the focus here on JD, why am I upbeat on JD.com? Well, if you look at the macro environment for China as a whole, it really has been terrible since the pandemic. But we have seen some data coming in that's starting to show that maybe this economy has finally bottomed. But regardless, if you look out over the past decade, JD.com shares have really gone absolutely nowhere. But when you look at the financial data over the past decade, JD.com is going somewhere. Over the past 10 years, sure, the stock hasn't gone anywhere, but revenues, they're not at the same level. Revenues 10 years ago were at $27.9 billion. Today, they sit at $177.7 billion. In addition, active users are up and many other metrics across the board. But now let's take a look at valuation and look just how cheap this stock is, as they trade at a forward PE multiple half of what their 5-year average is, sitting at 13.4 times. We are talking about a valuation cut in half. Earnings over the next year are expected to grow by 44%, and the following year, 25%. That's a 2-year average of 35%, meaning this stock has a PEG ratio of just 0.4, which is insanely cheap. I like buying stocks with a PEG ratio around 1.5. We're talking about 0.4. Now again, this isn't a stock that I want to own outright, long-term in my portfolio. It's just a rule that I have for my personal portfolio. But if you don't mind owning Chinese stocks, then go for it. It's a very cheap stock. But it doesn't hold me back from profiting from options. And in this scenario, I'm not going to look to sell options. I'm going to be looking to buy options. And here, we're going to be focusing on buying a call option. And I actually currently have this contract open. But I would be a buyer of the January 16, 2026 $40 call option. You would pay around $2.60 per contract, which would equate to $260. And you would control 100 shares of JD.com at $40. So if the stock goes to 50, you could buy it at 40. If the stock goes to 60, you get to buy them at 40. You can choose to take profits. You can buy the stock if you choose and keep it for as long as you want. Again, with options, no pun intended, you have a number of different options available to you. They are much, much less cash intensive. And if done the right way, they don't have to be viewed as gambling. You can utilize options much the same way I do in a much more conservative manner. And I'm going to show you the blueprint, and I'm going to be showing you exact strategies that I utilize in my 3-day option workshop. So again, check out that link down in the description below. It'll be September 30th through October 2nd. We'll be starting right around 8 p.m. Eastern Time. And again, if you can't join us live, that's okay. We have a number of folks that are already signed up that are over in Europe, and they're just watching the replay. You still have access to me, and you're going to get a free trial to my Options Edge. Free trials are not things that we do ever, but with this 3-day workshop, you will get a 5-day free trial. So definitely check out our 3-day option workshop, and if you haven't yet done, show your appreciation if you found any value in this video by just simply clicking that like button down below. I truly appreciate it. It really helps with the growth of this channel, and we'll see you in the next one. Take care.